It's time for the 360 round. For that, we bring in our panel to talk all about Chewy, which beat on the top and bottom line. A lot of exciting news surrounding Chewy. Nicholas Jones is with us, equity research analyst at JMP Securities, and Sean Dunlop, equity analyst at Morningstar. Thank you both for being with us. Sean, we'll start with you. You have a 4-star rating, 42 fair value estimates. What are your thoughts on earnings? I mean, I see the beat, I see the sales forecast lift, a foray into Canada. It seems like a lot of good things are happening here.
Yeah, on balance, it's a pretty solid quarter. We plan to maintain our $42 fair value estimate. We didn't see tons that changed that. They raised net sales guidance by 45 bips. They raised adjusted EBITDA guidance by 25 bips. In a lot of ways, we wonder if maybe the market's unwinding some pessimism going into earnings, with the shares trading down 25% over the past quarter. But there are plenty of green shoots. As you look at growth, we were encouraged by relatively balanced growth in net spending per active customer. About 10% of that came from units. About 5% of that came from pricing. So it was good to see traffic remain strong. Cost containment was effective. Obviously, management raised its adjusted EBITDA guidance for the year. And that's despite pretty hefty investments in an international thrust and automated fulfillment centers, sort of guided in the range of 56 to 84 million. In 2023, and then you've got that Canada market expansion, which I'm sure we'll unpack further, but that's a pretty big part of the Chewy narrative. So on balance, I'd say really solid quarter.
Yeah, you said this is part of perhaps the biggest news that came out of this last quarter. Nicholas, you have a market perform on this one. And a $50 target. What are you thinking here?
Yeah, so we're actually market outperform here. We really like the stock. We think there's a lot of potential upside to numbers. Management has been reluctant to increase its long-term targets for gross profit margin, but all signs indicate that they're going to be long-term above those targets, above 28%, which then trickles through to better EBITDA margins. So we actually think the guidance was pretty conservative, really encouraged by customers increasing sequentially, indicating kind of stronger top line demand. So overall, we think there's actually room for upside to numbers from here, which is what is driving the stock price reaction we're seeing today.
You talk about the customers increasing sequentially, and that seems like great news, but you really wonder, how is it that some of these retailers are suffering the way they are, Sean, and yet you have customers saying, I want Chewy, I want more food, more dog toys, more dog jackets. I don't know. I mean, I know we have a selective consumer right now. They're just all flocking to Chewy?
We do have a selective consumer, that's true. I think the market might overestimate the cyclicality of Chewy's business. So if you look at their net sales mix, 85% of that is coming from consumables, from food, and from treats. And then from pet medications. And those are things that you don't typically trade down or trade out of during a recession. It's just like you're not going to trade out of your kid's favorite breakfast cereal. So the business is actually quite stable. I mean, you look at the guided range for Q2, we got $2.73 to $2.77 billion in net sales. It's a very tight range. $3 and $4 in sales in the platform come from the auto ship. It's it's recurring, it's very predictable. And so Chewy's not a bad business to be in as you ride out an economic downturn, even as we've seen pressure in a lot of the consumer cyclical categories elsewhere.
Yeah, I mean, I think the medication and stuff is something that's really important. We've seen a lot of the animal care, pharma type companies that I watch as well, and and the recurring revenue. I mean, for example, I get Chewy, and for my dog, I don't even look, it just comes. What do you think here, Nicholas, about the landscape, any competition for what they are doing?
Yeah, I mean, there's plenty of competition, but I think that, the key takeaway here is Amazon has trained us all very well. We really want convenience. We want things fast. We want it delivered to us. So while there's plenty of competition from brick and mortar incumbents and even competition from Amazon online, Chewy's specializing within the vertical, and on top of kind of pet parents, being an impassioned audience who really care about their pets, really positions them well to provide that convenience and continue to win share.
How about customer service? I mean, when you call, someone actually answers the phone. I think that's a monumental thing as well. Sean, final quick thought.
Yeah, I think I agree. And it'll be interesting to see if they're able to replicate that as they move to Canada and probably other culturally homogeneous markets. You think about the UK, you think about perhaps Australia, Germany. But yeah, in the US, they've certainly done a bang-up job with it.
Yeah, as long as they have the supply chain and they can expand internationally, it seems like the world is their oyster. All right, I couldn't think of a dog or cat reference, but you know what I mean. All right, good to see you both, Nicholas and Sean. Nicholas Jones, Sean Dunlop, thank you.